Dinar Shift. Picture a scene unfolding in bank branches across the country in 2025. You approach the counter, your hand perhaps trembling slightly as you present a carefully bundled stack of Iraqi Dinar notes, a currency that represents years of diligent planning and fervent hope for a future financial shift. The teller takes the notes, runs them through the automated verification system, and then the critical moment arrives, a slow shake of the head. The words that follow are a sharp, chilling blow. We cannot accept these for processing. In that instant, it is natural to feel a rush of despair, the sudden, overwhelming sensation that your carefully constructed financial vision has collapsed. This immediate rejection, however, should not be viewed as a final verdict on the value of your asset, but rather as an urgent and necessary signal that your approach to the complex modern financial system must be refined and strengthened. This is a critical pivot point, not a catastrophe, demanding a calm, informed, and strategic response rather than a surrender to panic. The scenario of banks declining to process the Iraqi dinar is becoming increasingly common for holders of the currency in 2025, triggering widespread stress and confusion across the community. It is essential to understand the root cause of these rejections. The local branch teller is not asserting that the currency is valueless. They are simply acknowledging that their particular location, or perhaps the bank's standard operating procedure, is not equipped to handle what is categorized by major financial institutions as an exotic or high-risk foreign currency. This limitation is purely administrative and procedural. The decision to reject the transaction is not being made at the counter level. Rather, the teller is adhering to guidelines established by corporate compliance departments far above their pay grade. They lack the specific tools, the necessary departmental access, or the risk approval authority required to move forward with the transaction. This disconnect stems from the fundamental changes in how banks have structured their foreign currency operations over the past decade. The era of a dedicated, fully equipped foreign exchange desk in every neighborhood branch has largely ended. Modern financial institutions have consolidated these complex, compliance-heavy services into centralized processing hubs, specialized authentication offices, and stringent compliance channels that exist entirely outside the visible retail banking environment. Therefore, an automatic refusal at the counter should be interpreted not as an absolute no from the entire institution, but merely a no from a frontline staff member who is restricted by a highly structured and limited set of permissions. The critical objective for any dinar holder is to transition their focus from the point of rejection to the task of locating the correct point of acceptance within this intricate and multi-layered banking structure. Many holders understandably question why dealing with the dinar has become so laborious, particularly as the global financial landscape evolves rapidly. The answer is rooted in the increased scrutiny and modernization efforts across the international banking sector. Institutions are aggressively upgrading their technology and tightening compliance regulations to counter global risks, including money laundering and the persistent threat of counterfeiting. For a currency with a historical background as complex as the Iraqi dinar, these protocols are especially rigorous. The new, post-2003 series notes are the only ones currently recognized as valid for exchange, specifically because they incorporate advanced security features designed to prevent fraud. A significant hurdle is presented by older notes printed before the 2003 currency transition, often associated with the Saddam era, which are no longer deemed legitimate tender by international financial systems. However, even the newer valid series of notes can be rejected if they are overly worn, damaged, or otherwise compromised from years of handling. Modern currency verification machines are hypersensitive, relying on precise scanning of elements like micro-print markers, sophisticated watermarks, metallic security threads, and specific polymer characteristics. These machines do not rely on a teller's visual judgment, they enforce an objective standard. If a note fails to meet the precise criteria, even due to minor imperfections, the system flags it as too high risk and rejects it immediately. This stringent protection mechanism is purely an institutional defense against risk in a stricter financial world. A common and often costly mistake made by dinar holders is the assumption that the authenticity of their notes is visually self-evident, or that a bank teller should simply accept their word for it. In the highly regulated 2025 financial climate, verifiable proof is the single most important factor. Therefore, the essential first step for any holder is to proactively verify their notes. This involves a meticulous examination of the currency for proper design details. Do your notes clearly display the intended watermark, which may feature symbols like a horse's head? Is the metallic security thread clearly visible and correctly integrated into the paper? Does the specialized ink demonstrate the expected color-shifting property when the note is tilted in the light? The physical condition of the currency is also a crucial consideration, as advanced authentication scanners are designed to look for specific texture and paper qualities. Notes with faded ink, excessively rounded or dog-eared corners, or noticeable folding damage from being carried or stored improperly for a long period are prime candidates for rejection. This is not because the note is necessarily counterfeit, but because its degraded physical state causes it to fail the system's automated risk assessment. For those seeking maximum confidence before approaching a financial institution, professional third-party grading services exist to authenticate and encapsulate notes and secure holders. Presenting a sealed holder with official authenticity certification to a bank can effectively preempt doubt and skepticism before the transaction even begins. It is also vital to grasp the often overlooked truth that foreign exchange services are not a standardized, universally offered product across all banking institutions. Every bank establishes its own distinct set of policies regarding which exotic currencies it will handle, and these rules are subject to frequent change based on market conditions and regulatory updates. It is entirely possible to be firmly denied at one branch of a major bank in a local suburban area, only to find immediate acceptance at a different branch of that very same bank located in a major metropolitan center. This disparity is entirely due to variations in internal authorization levels and access to specialized currency processing networks. A small, local, or regional bank branch may only be authorized to process common, high-volume global currencies, such as the euro, the British pound, or the Japanese yen. Conversely, international branches, major city headquarters, or private client divisions often maintain direct, real-time connectivity to foreign central bank networks and specialized clearing systems that are required to process more complex currencies like the dinar. By simply reframing your question at the counter, not asking if the teller can cash the notes, but asking which department or which location handles exotic currency processing, you shift the interaction from an immediate denial to a constructive request for a valid internal referral toward the correct financial channel. Successful navigation of the banking system hinges on asking the right questions with a knowledgeable and informed approach. Instead of a simple request like, "Can you exchange these notes?" a more effective approach is to inquire, "Which foreign currency officer should I contact to discuss the authentication of these specific notes?" Or, "Do you have a dedicated foreign currency specialist available at this location?" Or which nearby corporate branch maintains the necessary authority to process the Iraqi Dinar. These sophisticated questions signal to the bank staff that you understand the internal structure and are prepared for a response that goes beyond a superficial first-level answer. Many major financial institutions strategically house their foreign exchange specialists within corporate banking divisions, dedicated international trade offices, or private client services. This organizational structure often means that the necessary expertise is not accessible via a simple walk-up counter. Uninformed customers often treat their first bank visit as their final attempt, but a truly strategic holder views it merely as the first stage in a comprehensive navigation process. Knowledge combined with polite, firm persistence is a powerful advantage in this scenario. Your goal is not to engage in a confrontation with a staff member who lacks the ability to assist you, but rather to locate and engage directly with the person who possesses the genuine authority to authorize the transaction. As the financial world progresses into 2025, there is a distinct evolution towards specialized intake channels for foreign currency. Beyond the traditional banking system, a growing number of dedicated redemption facilities are emerging, often located in major metropolitan hubs. These are not conventional banks. They operate as highly compliant, security-focused, appointment-only centers. They are equipped with advanced institutional-grade verification technology and maintain direct communication lines with global foreign exchange clearing systems. Their specialization allows them to process the complex or less common currencies that standard retail banks actively choose to avoid. These specialized facilities operate with a high degree of professionalism and require stringent identity verification and thorough documentation before proceeding. You cannot simply walk in and demand immediate service. The process necessitates scheduling an appointment in advance, providing all required identification and purchase documents, and strictly adhering to their compliance-driven procedures. For dinar holders who meet these demanding criteria, these centers frequently offer clearer pathways and significantly faster processing times than a typical commercial bank. Understanding how to locate and properly access these targeted channels is the key differentiation point between a frustrated holder and one who successfully completes their exchange. Documentation represents the next decisive factor that can either streamline your process or introduce insurmountable hurdles. In the contemporary compliance environment, banks are obligated to establish a verifiable, lawful source for your Iraqi dinar notes. This anti-money laundering (AML) requirement means they want to know precisely where the notes were acquired, who the seller was, and whether the original purchase transaction was properly recorded. If you initially acquired your dinar through a licensed, reputable currency dealer or a major established currency provider, you should have corresponding receipts. Protecting and preserving these documents is absolutely paramount, as they can represent the difference between swift success and an outright rejection. For transactions involving higher monetary values, you should be fully prepared for intensified scrutiny, which includes providing standard legal forms of identification, such as a passport or driver's license. Furthermore, large exchanges may require additional detailed paperwork that legally confirms your complete and lawful ownership of the funds. This meticulous focus on compliance should not be viewed as an obstruction, but rather as the essential gatekeeper that validates the integrity of the asset and ultimately unlocks the progress you seek. The compliance framework is designed to secure the process for all legitimate parties involved. It is important to speak candidly about the powerful emotions that a rejection at a bank counter can trigger. A simple no can immediately induce feelings of intense frustration, embarrassment, and an understandable wave of panic. Many holders, upon facing this setback, prematurely conclude that they have been fundamentally misled or that their entire financial premise was a mistake. However, this emotionally charged conclusion is entirely inaccurate and unhelpful. The correct interpretation of a rejection is that the specific location, documentation, or knowledge base you presented was insufficient for that particular level of the system. The most valuable lesson to extract from this experience is that you simply need to locate the right facility, ensure you possess the correct documentation, and arm yourself with superior knowledge of the process. Individuals who approach this journey with a serious strategic mindset, rather than an emotional one, will inevitably move forward with greater speed and efficiency. Every single rejection should be reframed in your mind as a helpful redirection, a message that clearly states, "That was the incorrect doorway. You must now find the next, more appropriate one." The successful strategist does not concede defeat. After a single attempt, they simply integrate the new information into an improved multi-step plan. The global financial infrastructure is currently undergoing a period of profound technological transformation. New digital verification systems are rapidly reshaping the entire process by which foreign currency is confirmed, transferred, and officially recorded. Certain institutions are now leveraging advanced blockchain-based verification methods. Others rely on highly centralized scanning hubs that may operate overseas or utilize sophisticated partnerships with foreign central banks that are still in various stages of formation. This dynamic, developing environment means that not every component of the system is perfectly synchronized or universally ready at the same time. However, it is precisely in these periods of flux and development that prepared and well-organized individuals gain a definitive advantage. As financial rules become progressively more rigorous and security standards tighten, the intrinsic value of impeccably documented and professionally verified currency notes dramatically increases. Those who make the effort to align their holdings and documentation cleanly with the most current international compliance requirements will find themselves in a profoundly strong, optimized position as the financial world continues its necessary process of adjustment and evolution. If your initial attempt to process your notes fails, it is crucial to adopt a structured, step-by-step strategy instead of impulsive action. Firstly, commit to confirming the authenticity of your notes, using all available visual markers and consulting professional graders if necessary. Secondly, meticulously gather and protect every single receipt, invoice, and document related to your original purchase of the currency. Thirdly, cease wasting time at retail branches that openly confirm they do not offer comprehensive foreign currency exchange services. The fourth crucial step is to insist on speaking directly with a designated foreign exchange officer, or, at the very least, an authorized branch manager who possesses the ultimate currency processing authority. Finally, if the traditional commercial banking system remains persistently closed to your needs, you must expand your search diligently to include the specialized intake and redemption facilities that are specifically designed for processing complex, high-value currency transactions. Implementing this strategic pivot can often represent the decisive move that transforms frustration into successful approval. It is also critical to maintain an important sense of realism. Not all Iraqi dinar notes are treated equally within the strict operational guidelines of global banks. The old pre-2003 series notes, the ones that do not feature the current anti-counterfeiting design, no longer retain official exchange recognition within the regulated banking environment. Furthermore, any notes that are excessively damaged, heavily worn, or simply too old will consistently struggle to clear modern verification controls. If your notes fall into these outdated or compromised physical categories, your pathway for them becomes entirely different. In the case of older, non-compliant notes, you may need to explore a separate market entirely, perhaps consulting private collectors, numismatists, or buyers who specialize in historic or collectible currency. However, before making any assumptions about the potential fate of your holdings, it is an absolute requirement that you first compare your physical notes to the current, universally recognized standards established by the Central Bank of Iraq. This objective knowledge alone will eliminate guesswork and remove the fear born of uncertainty, allowing you to move forward with a clear, factual plan. Another fundamental misconception is the expectation that bank personnel are required to serve as detailed instructors on the intricacies of the financial system. In reality, bank employees are primarily trained to deliver pre-approved answers and follow rigid, automated procedures, not to provide comprehensive education on high-level foreign exchange policy. If their screening system instantly returns an unaccepted message, their involvement in the process is effectively terminated. Your success in this matter is entirely dependent on your subsequent actions. Understanding this dynamic, that retail staff represent only level 1 of the processing chain, is an immediate boost to your confidence and strategic capability. To achieve a successful exchange, you will almost certainly need to access level 2 or level 3 financial channels. These higher levels typically involve corporate departments, specialist foreign exchange desks, and require appointments, along with full verified documentation. The smart holder always sets their sights higher than the first available customer service desk. We must also acknowledge that many contemporary banks in 2025 consciously prioritize services that are considered low risk and mainstream. They actively seek to avoid the significant compliance burden and liability associated with managing uncommon currencies. This institutional decision to avoid risk does not, however, negate the underlying status or future potential of the currency itself. It simply means that you must channel your efforts toward institutions that possess the necessary expertise, the proper regulatory authority, and a business model that is specifically structured to handle complex international transactions. It only requires the opening of one correct door to initiate a new and significant financial outcome. Never forget this powerful truth. In any intricate system, the majority of people fail simply because they give up before they truly understand the structure. You, as a dedicated viewer of Dinar Shift, are demonstrating a commitment to being informed, prepared, and strategic. This proactive mindset is a considerable advantage in a world where clarity of purpose and robust confidence are the true drivers of results. You are actively cultivating the discipline to look beneath the surface, to ask more insightful questions, and to follow a methodical strategy rather than merely clinging to hope. This entire journey is fundamentally about readiness. You are not passively waiting for a miraculous event, but are actively building your knowledge base, organizing your critical paperwork, professionally verifying the authenticity of your notes, and systematically studying real-world banking behavior. Those holders who commit to this preparatory work early will always be the ones best positioned to benefit when significant structural changes or opportunities eventually manifest. The rejections that are currently being reported across the banking network are best interpreted as clear indicators that the system is entering a necessary phase of tightening and securing its operations. When the processing doors ultimately open wider, the individuals who took the time to prepare thoroughly will be able to walk through with complete confidence and minimal hesitation. Some financial experts describe this complex period as the essential cleanup phase preceding actual verifiable progress. Banks are systematically clearing out the risks associated with counterfeit notes, incomplete or questionable paperwork, and obscured supply chains, all to make way for a more stable, transparent, and regulatory-compliant foreign currency environment. When we reflect on historical precedent, every major global financial shift has necessitated a thorough cleansing stage. Historically, only those individuals who possessed properly documented and compliant assets were able to navigate the transitions smoothly. The crucial lesson for the present moment remains precisely the same. Superior preparation will consistently yield superior results. Therefore, here is your essential takeaway. If your primary bank institution refuses to accept your Iraqi dinar notes in 2025, you must absolutely resist the urge to panic or to automatically assume you have made a poor decision. Instead, fully embrace the reality that you are operating within a more sophisticated, more cautious, and more compliance-driven global financial world. That world now explicitly demands meticulous organization, complete documentation, verified authentication, and unwavering persistence. You are fully capable of meeting these precise requirements. Right now, the structure of your strategy is the most valuable asset you possess. Every note you meticulously verify, every official receipt you secure, every targeted question you ask a specialist, and every specialized financial institution you evaluate represents a building block in your forward pathway. The sole difference between debilitating frustration and ultimate success is simply the level of your preparation. Those who maintain their learning, their organizational efforts, and their forward momentum will be the ones positioned to execute their plan decisively when the appropriate moment finally arrives. Continue to rely on Dinar Shift as we commit to providing calm, informed, and actionable guidance for this complex journey. We will continue to help you navigate every necessary step with the utmost clarity, professional confidence, and a consistently proactive mindset. Remember that you are not isolated in this process, nor are you adrift without direction. You are simply engaging in the necessary preparation for the next and most important doorway. Before we conclude today's broadcast, keep this final, powerful message at the forefront of your mind. A bank teller's rejection does not and cannot define the intrinsic status of your currency. It serves one purpose: to test the adequacy of your preparation and the strength of your resolve. You are not failing, you are actively positioning yourself for success. You are learning the specific, correct methodology to engage with the highly regulated system. And by refusing to quit after a single setback, you are proving yourself to be a smarter, more resilient holder than the majority. The rejection you may face today is merely the constructive first step of a successful, well-thought-out plan.